Section 24, Exploring Loan Options. In the last section, we looked at the differences between banks and mortgage brokers. Once buyers decide who they want to work with, the next step is selecting a loan program that fits their financial situation and home ownership goals. One of the biggest misconceptions buyers have is believing there is a best loan. The truth is there isn't. The best loan is simply the one that best fits the buyer's financial circumstances, long-term plans, and eligibility requirements. As a real estate professional, your role is not to recommend a particular loan program. Instead, you should understand the basic purpose of the most common loan options so you can help buyers ask good questions and know when to involve their lender. Every buyer's situation is different. No two buyers are exactly alike. Some buyers have excellent credit and substantial savings. Others may be purchasing their very first home with limited cash available. Some are veterans. Others may be self-employed or purchasing property in a rural community. Because of these differences, lenders offer a variety of loan programs designed to meet different financial situations. Finding the right financing begins with understanding the buyer's goals, not simply finding the lowest interest rate. The most common loan programs. By now, you've already been introduced to the major residential financing programs used throughout Arizona. These include conventional loans, FHA loans, VA loans, USDA loans, and portfolio and specialty loan programs. Each program has different qualification requirements, documentation standards, down payment options, mortgage insurance requirements, and underwriting guidelines. This is why two buyers purchasing similar homes may qualify for completely different financing. Real-world example. Michael and Lisa both want to purchase a $450,000 home. Michael has excellent credit, stable employment, and a 20% down payment. His lender recommends a conventional loan. Lisa is purchasing her first home. She has good credit, but limited savings. After reviewing her financial information, her lender recommends an FHA loan because it requires a smaller down payment. Neither loan is better. Each loan simply matches the individual buyer's financial situation. The importance of asking questions. One of the best ways real estate professionals can help buyers is by encouraging them to ask thoughtful questions during the loan application process. Examples include, what loan programs do I qualify for? What down payment is required? Will mortgage insurance be required? What will my estimated monthly payment be? What are my estimated closing costs? Are there any first-time homebuyer programs available? These conversations help buyers better understand their financing choices without placing the real estate professional in the position of giving mortgage advice. Arizona broker tip. Which loan do you want? Instead, ask, what did your lender recommend? That simple question keeps the conversation focused on the lender's professional advice, while allowing you to better understand your client's financing. Helping buyers compare their options. Sometimes buyers receive more than one financing option. For example, a buyer may qualify for both an FHA loan and a conventional loan. Rather than encouraging one program over another, suggest that they compare the complete financing package with their lender. Important items to compare include down payment requirements, monthly payment, mortgage insurance, interest rate, closing costs, cash needed at closing, long-term affordability. Looking at the entire financing picture helps buyers make better informed decisions. When loan programs affect the contract, different financing programs can also affect the real estate transaction. Certain loan types may require additional property inspections, specific appraisal requirements, longer underwriting timelines, additional documentation before closing. Knowing this allows agents to set realistic expectations for buyers and sellers while helping everyone stay on schedule. Real-world scenario. Jessica is purchasing a home using a VA loan. The property appraises for value, but the appraiser identifies several required repairs before the loan can close. Because Jessica's agent understands the VA financing process, they quickly communicate with the listing agent and negotiate completion of the repairs before closing. Instead of creating conflict, everyone works together because expectations were established early. Your role as the real estate professional, your responsibility is to educate, not recommend loan products. You should help buyers understand that different financing options exist while encouraging them to discuss the details with their lender. Whenever buyers ask questions about qualifying, interest rates, loan approval, underwriting guidelines, or which program is best, refer them back to their mortgage professional. Staying within the scope of your Arizona real estate license protects both your clients and your career. Contract law connection. The financing selected by the buyer may affect contract performance, appraisal timelines, inspection requirements, and the scheduled close of escrow. Understanding these differences allows real estate professionals to anticipate potential issues, communicate effectively with all parties, and help keep the transaction moving forward. Online discussion. Question 1. Why isn't there one loan program that is best for every buyer? Answer. Every buyer has different financial qualifications, goals, and circumstances. The most appropriate loan depends on factors such as credit, income, available funds, eligibility, and long-term plans. Why should buyers compare more than just the interest rate when selecting a loan? Answer. The overall financing package includes down payment requirements, mortgage insurance, lender fees, closing costs, and monthly payments. Looking at the complete package provides a better understanding of the total cost of financing. Question 3. What is the real estate professional's role when discussing loan options? Answer. Agents should educate buyers about the general financing process, explain how different loan programs may affect the transaction, and refer buyers to qualified mortgage professionals for loan recommendations and financial advice.